Hello, everyone. Welcome to another episode of Lunch Tech in Chat. Once again, we don't have a guest, but the guest is coming. The guest is coming. We
Yes,
just
they're coming.
ourselves.
We have one future guest that we're in talks to that is someone that's been working has been working in the frontier between like AI and Web3 space. We don't know that maybe potentially be joining us a little bit as a third co-host. We will see. We'll see.
Well, I just want to say that in the last week, I'm not even kidding. I'm just looking at my emails. I got 21 emails of people wanting to participate since the last time I read my emails, which was probably, I don't know, 4 days ago.
Wow.
So,
Okay.
yeah, the demand is growing. We need to.
That's growing. The demand is growing. It's just that we are not keeping up. So again,
Yeah.
in all of this, Andre is super efficient. I'm highly inefficient when it comes to responding to you guys. So next time, if you are listening to us and you want to participate, put like hashtag will move your butt. Got it. And we'll come
All
back
right.
to you.
So today we want to talk about some of the changes that have been happening in the AI bubble. So we talked about this AI bubble or the sense of bubble and how the market has been feeling this. So we're going to talk a little bit about this. And I just want to talk about the competition in AI as well. So, Will, what I have been seeing, and I know we have been saying this for a while, LLMs are starting to become a commodity, but I even in the space of thinking the LLMs are being commoditized, the competition is very strong at the moment. So if we look at OpenAI, they've been talking about GPT-6, and then they released GPT 5.1, I think, a couple of weeks ago. And this week, Google just released Gemini 3. So Gemini 3 is now the top model. And probably in the next week or the next couple of weeks, we're going to see something from Anthropic and then Grok. And then the cycle keeps moving on and on as a turning wheel that never ends. GPT-6 is coming at some point. Let's see how much better that's going to be. But as you can see, I think the race for the best model, it's really hot. It's really, really heating and hot at the moment. And we see that models are becoming more efficient in one thing than others. There's a new version of Banana for image generation. And, like Claude sort of still, I don't know if now with Gemini 3, but it was the best coding it was the best model for coding. And we're seeing that some of those LLMs are starting to take a space in this ecosystem of what they are better at.
Yeah.
So, yeah, so it's a big race that I don't know, like if they will become niched LLMs and we're going to know, oh, when we're doing coding, let's use Anthropic. When we're doing general, let's use GPT. Or if someone like Gemini that is always trying to focus on everything will be big enough to sort of contain all the different content. I know it's not very good at, for example, trading. It is getting better at coding generation. I don't know Gemini 3. I haven't tested yet. I saw yesterday. I was supposed to get my hands on, but I did not have time. So I will spend some time on it and I will let you guys know. But what do you think, Will? What are you seeing in this? Like, are you still tracking the LLM changes and the enhancements and efficiencies, or for you is just like, I just use whatever it's there? Like, how commoditized is that in your mind right now?
I think it is getting commoditized, but I think coming back to a conversation that I was actually having with one of my mates yesterday, I think there are areas of it that people are going for like moonshot kind of like revolutionary AI applications, transformations, etc. And that's where I think a lot of capital is being coming into this space, and then kind of like companies building on those like moonshots, kind of like transformational changes that look like very sci-fi. But I think where I see that it probably like in the shorter term, medium term, it should be used is more like on pragmatic changes around enabling some of the basic automations of existing, processes in business. And that's probably where I think a lot of the gains will be made. Right. So I think at the moment, there's a bit of like a delta between that builders living in sci-fi mode, kind of, and doing moonshot stuff and selling that onto venture capital firms and raising a lot of capital on it. And then the underlying kind of like, I guess, no, I'll call it normies without a pejorative term to it, but like normies demand, which is more like people that are pragmatically just trying to automate a little bit more their existing flows to free up their stuff from doing boring shit that they don't like doing. And I think there's, in the shorter medium term, there is much more value on this second group than there is on that sci-fi group, effectively, right? But a lot of the capital is being raised on these moonshots here. This is not, I think, too, I guess, unfamiliar for anyone that actually works on in technology in general. Crypto has gone through several stages of those moonshot kind of vibes. And as we know, it has taken at least 4 or 5 generations of Bitcoin up and down for some of them moonshots to become actually a business model, right? I don't think AI will necessarily manage to bootstrap all of that, kind of like saying, hey, we are creating sci-fi movies, sci-fi kind of like experiences with AI like this, because we're still human beings in the middle. Even if the agents can do a lot of stuff, we still only have a limited number of bits that we transmit and we communicate to each other. And if we are doing things on like on sci-fi, you're going to have a relatively small, limited portion of the population of human beings that are living in the sci-fi world versus the human beings that are living here in the normie kind of day-to-day world. And I think that's where I see it. So there's a kind of like a behavior kind of like, as a technologist, I get excited as much as anybody else, as much as you, Andre, about the moonshot stuff. But when I go from having that vision of sci-fi to talking to normal human beings here that don't read sci-fi, don't get all that excited about sci-fi as much as I do, and I'm sure you do, you know that there's a big delta. And it's these guys here that I still have hand on the money most of the time, and they are the ones that I say, oh, I like the sci-fi stuff, but let's do this first, right? So these are the guys that actually say, we're going to do this first, and then we evolve towards a sci-fi. So it's actually kind of like almost a natural thing. I think it's kind of is the cycles through which technology sell moonshots, raise capital through moonshots, but actually build the ants thing from the boring onto the moonshot thing. And that takes quite a few cycles. And in the middle, things will change as well, because the new sci-fi will be a moving target rather than that kind of like sci-fi. I can say that I've observed that firsthand in the Web3 space. What were the moonshots of 2016, 2017, and where they are now, almost 10 years later? It's still relatively like the same pattern, but the way that it has evolved was a moving target in that world. And I don't expect AI to be any different.
I think it's quite interesting because, as you're saying, like the thing that will add more value is, process automation, automating the repetitive tasks or the things that are boring and the things that add efficiency. And to build solutions like that, you don't even need like a top of the market model. If you have like a good model that if is fast enough, good on understanding documents that have been ragged into the knowledge base and follows your prompt in a structured way, you can get most of the results that you need in workflows or systems or GPTs or whatever.
Yeah.
But I feel like when companies are making the decision of which tools they're going to be using, they are always talking and expecting to use the latest models. Like I know it's like even for the companies that I work with and I see, it's always a big hype of a new model has been released, it needs to be activated or available for us to use. But it doesn't actually add that much benefit anymore because it's just in a level that, like I said, 5.1 to Gemini 3 to 5, it doesn't make that much difference. Like even 4.5 on GPT was already good enough for a lot of the use cases.
Yes.
So yeah, so it's getting to a point that, in my view, it's more about efficiency, cost, and time to run, depending like if you need to be fast or not, because you can be using thinking models. And now we have models like that are coming up open source that are as good as GPT-5. So that raises the question of, okay, you're starting a company or whatever, and you don't have enough money to run or to pay an LLM. Can you just run it locally? Like if you've got a good MacBook or if you've got like an NVIDIA processor, like is that just the point now? It's cool. We get it. It's becoming very democratized, and I like the competition because it's creating lots of opportunities. And I do see that China's picking up quite quickly as well. So I think they're probably gonna surpass. They're gonna become bigger than the US very soon. So they better watch out, like companies like Google and OpenAI. But yeah.
There's the old saying, right, that China is they're not like years behind the US in AI technology, or most technologies. They're 12 hours behind. It's just the time of the clock to run from the from the west coast of the US into China. So it's it's not even 12 hours, it's like 8 hours or something. Kind of like that's the difference of delay that China has relative to the US almost these days in some of these technologies, right? It's just the time for
So
it.
you leave the technology for 8 hours until the other one comes online.
And then you go on a loop like that over and over and over around the world, and it kind of like probably justifies as well why nobody is saying we're going to put a stop on AI, because the 8 hour cycle will continue regardless. If the west coast of the United States actually stops doing exciting stuff on AI, 8 hours later the Chinese builders will actually be still doing this, right? So, and how many rounds of the Earth you wanna be behind?
I feel like most of the good AI technologies in the US, they even being like a US company, they are of Chinese heritage or even Chinese born, which is quite interesting. I think because of the investment that China had on AI, it created really good people in the market that are really specialized on AI. So
Yeah,
yeah,
a lot.
yeah,
Definitely,
China's in a good position.
definitely when you see, and if people follow kind of like platforms that cater for like white paper or academic research, like fundamental research, that kind of stuff, and if you follow the top ones on AI over many years, there's always I guess Chinese users from the Chinese diaspora or second generation Chinese that are in those spaces. You don't even have to look that far. Just go and look at the names of different people that actually are building in their backgrounds from MIT and other top universities in the US, UCLA, etc. You're gonna always see the Chinese PhDs writing those papers. So they definitely are, and that knowledge goes back home, because China is still to this day, it still relies a lot on its diaspora. Even if it's second generation Chinese that work with like Chinese in the last couple of years, they revert back. They always revert back to the homeland. So it's a guarantee that that technology and that knowledge transfer will be going back to China.
And Will, I just want to pivot. I only have 20 minutes, so I want to pivot this conversation a little bit, and I want to ask your vision on this, right? So we talked about the AI bubble. We're starting to see Nasdaq dropping. I think in the last 30 days has dropped 426 points, so around 1.85%. We're seeing people like Peter Thiel taking all his investment out from Nvidia. A lot of people removing their investments from Nvidia or even Palantir. We're seeing people like Warren Buffett changing his investments from companies like Apple to Google. He was never an investor of Google. So there's a bit of a movement in the like top tech companies space. Do you think this is a sign of the bubble about to burst? Do you think this is a whale movement or dropping prices for people to rebuy and make more money? Or do you think there's a shift in the leaderships of the companies? Stuff like Warren Buffett might be seeing that Google might be the next big company as Apple used to be. Like, what's going on in your head on all those points that I made?
So there is a bit of like a mix of mixed signals actually happening right now in the markets. In the previous episodes, we talked about, and people actually can look them up. We talked about the money glitch of the money glitch or money loop that is effectively going on between different hardware, cloud, and software companies within the AI system. So people can definitely refer to that to see what is it that we are talking, what is it that we are talking about. But effectively, is right now a lot of demand and like investments being made where money is circulating between different players in the field. One is raising capital for the other, so actually can use that capital actually to
And everyone's being
invest.
profitable with the same money.
And everyone is kind of like just the money kind of almost circulating definitely between players. But we are talking about that is on the supply side, right? So it's effectively all the money circulating on the supply side. On the demand side, it still needs to be met. But the things that we were talking about earlier in this call, which is like the moonshot builders building future agentic kind of like sci-fi movie style stuff. And then the normies here saying like, what is it that we're doing today? not in 15 years time. And there is a bit of a gap between all of that money circulating on the supply side and huge amounts of capital, and then the demand side here. What is it that are building today, and how much of that is required in terms of compute, and how does that actually going to work down the bottom line of some of these companies in that infinite money. The market now is having mixed signals in the sense that you're having people such as Michael Burry and Peter Thiel going more direction. Okay, like we've had a good run, and maybe as either a portfolio rebalancing strategy, which is again, it's not a unhealthy thing to do from time to time, or a proper short. They think like, I do think that there's a bubble, or they think that there might actually be a bubble, and they're actually really kind of going against the direction of the market. So on those two personalities, there's a little bit like a different strategy. Okay. And then I'll talk about the Warren Buffett one. So Michael Burry is actually actively betting against it. So he is, so for those that actually don't know or don't, or haven't heard of the name, Michael Burry is better known in the Twitter X spaces as Cassandra. Cassandra, for those that actually don't know, actually the reference to Greek mythology is the one is the goddess, I think, that actually reads the future. So he operates under the name of actually Cassandra, and he has put some puts, which is effectively you're betting against the direction of a current market, puts that have a total notional amount of close to $1 billion actually bet. So $187 million in notion puts against NVIDIA and $900 million against Palantir Technologies recently. Together, those positions represented about 80% of the Science Asset Manager, which is the company that he operates through, were disclosed in US equity portfolio filings with the SEC. So effectively what it means is that actually he's putting puts on the market. It's an option instrument that actually effectively you are buying you're buying an option for a sale of a security. So effectively you're buying against a sale, and you're making the difference between the price of the put and the price of the market. And he is betting on total about $1 billion on against the valuation of the market, right? He's actively, he's more like on an active position of saying, this is a bubble and I'm gonna bet against the bubble. For
Well, I
those that
mean, just to complete that, I think in his point of view, it's very clear that he believes this is a bubble, or else he wouldn't be doing this. And
effectively
just for people to make sure you know who he is, if you have watched the movie The
the
Big
big short,
Short with Christian Bale, that guy is Michael Burry. So just for people to click who the person is.
yeah, and effectively he bet against the leverage mortgage market before the GFC. This was his main kind of. Michael Burry has made good bets and bad bets over time, so he has failed on some bets. Some of his bets actually have made a lot of money. The one on the mortgage market in 2008 made him a lot of money, which is effectively was at the basis of science management. And anyway, so he's right now he thinks AI is the bubble. He might be looking at some of the data that we post here between the demand and the supply side to actually to make his calls. Another personality that is also on the, I guess, not necessarily on the bearish side, but like on more like I'm reducing a little bit the exposure, is the well-known venture capitalist Peter Thiel. Peter Thiel is behind, not only a VC fund, but he also manages a hedge fund out of Silicon Valley. He involved in a lot of companies. His very first bet, for those that actually don't know Peter Thiel, he was one of the earliest investors in Facebook. And he made a lot of his fortune that was built from that early investment in Facebook, which has created the fund. And then he's involved in all things around places like the Y Combinator and big incubation for startups that are looking into that future. Peter, what he's doing is he sold his stake on Nvidia, which was worth about $100 million as of the of Q3 of this year, and also he cut his brother US equity holding significantly from what it was back in the third quarter, $12 million to $74 million. My reading, when I look into some of the filing more from the Peter Thiel side, is not he's betting against the market. It's more like say that there has been a good run in AI and in technology firms over the last couple of years since we came out of COVID, and he's more like potentially rebalancing his portfolio, taking off some of the stakes, some of the chips off the table, and reallocating this somewhere else, right? It's a different play from Michael Burry. Michael Burry is actively betting against it. I see Peter Thiel is more like rebalancing things because it's healthy to do rebalancing. Everybody that has operated in the market for long enough, a curve is never a straight line that goes and goes forever. It's actually rebalancing. Take some chips off the table from time to time is actually a healthy thing for any investor to do. And I read the position that Peter Thiel is taking a little bit more in that area. When
Now,
it
Warren
comes,
Buffett.
and Warren Buffett is going a little bit on the other side, but I mean, we talked about it, I think previously. Warren Buffett, he's got the benefit of time that not a lot of not a lot of players do, is because he
That's
uses
actually a joke
on
because he's
it's
got
it is
time.
a
He's got
joke.
a lot of time to invest, but he's quite old, so he doesn't have the benefit of time.
I would say not necessarily him as a person, because he's not immortal, but the company that he created, uh,
Yes, please
Ber-
clarify.
Berkshire Hathaway, they do have the benefit of time because they see themselves as almost like, I guess, a temporal player, right? They're going to be here for, generations, and therefore they have the benefit of that time, not the time of the biological individual, but the entity that is behind. Let's say like that. Um, so the entity that is behind sits on a cash pile of more than $300 billion worth of, short-term US bonds. So definitely has a lot of money to play and to move, and has been sitting on that cash for quite a while now. So Warren Buffett, he has decided to put some investments into Google. The reasons are more like, traditional, I guess, technical plus fundamental analysis that actually Warren Buffett does. Warren Buffett is very much focused on the fundamentals, not only the technical analysis of day traders. He's looking at it and he's saying, well, um, there is an AI race going on. There is a geopolitical AI race going on. Out of those players, he worked a lot on moat, right? Who are the players that have been here around the longest, that have harvest the most data, that have potentially the biggest moat to really kind of having distribution, potentially vertical distribution, kind of like power in the balance of power between all of these companies. And in his mind, he thinks Google has a pretty sweet spot there. So
He's
he's
probably thinking after
investing
the
Google.
bubble who's gonna survive long term, right? Like
Very,
because
very much so.
I do have a view, like I do like Apple products. I've got an iPhone, I've got a Mac, I've got AirPods, I've got an Apple TV at home. But I do see and I do feel a FOMO that a lot of the Android phones are now getting more powerful with more AI native outside of the box, while Apple is sort of struggling to get adoption and usage of AI. They just can't get it right. They just made a deal with Google now to power Siri by Google, meaning that they gave up on trying to make a good AI. So maybe that's what Warren Buffett is seeing, like in this race for Google, this is just natural. This is just going to be part of their products. As for everyone else, this seems to be quite a big hurdle that they still need to get through. I don't know, like that might be the view, right?
Yeah, I think Warren Buffett has his old saying, that he's got like lots of sayings that people can like repeat from time to time and say. And one of his sayings is like when people ask him, for how much should I hold a stock, and his answer to that is forever. So to your point, I think what when he positions himself, in his relationship with a company, I think generally speaking, he has that, old, kind of almost like old style, value investor mindset around himself, which is kind of like when it takes a long time to make his decisions, right? He doesn't make decisions on the speed of light, like his markets operate. But when he makes a decision, he makes it for a long time. And I think, yeah, so he might be looking at some of these things, even though he's not a technologist. He had always had a long-term position on Apple. Um, he might be just saying, yeah, when the bloodbath is on the street, and blood always comes to the street, sooner or later, blood comes to the streets. When bloodbath is out there, what uh, who are the players that he thinks that will be coming out with blood in their hands, but not actually their heads off. He probably looks at Google and saying like, okay, yeah, I think they're going to be part of that group, and therefore makes sense for him actually to make the investment.
So, Will, just for us to wrap this episode up, as just changing your hats now and putting your hat as sort of a VC person, you do get involved on a lot of VCs and investment and stuff like that. You as Will, looking at the market, what's your opinion? We're not financial advisors. As long as you do VC work, but in this podcast, we're not financial advisors. So putting sort of a VC hat, what's your view in the market? And if you were an investor on sort of tech companies, I know you are, but let's say if you were an investor on tech companies, what would be your move? Like, how are you feeling? What's the sentiment of the market in your view, your eyes, not anything else, your brain? How are you feeling it?
Um, I think I think that there are parts of the market that are showing some, you know, areas of weaknesses. Like, I can see that on the Web3 spaces, there is parts of the market that are like, flaky at the moment. I do see also similar similar but different framework actually happening as well in the AI parts of the market. So a lot of people trying to build modes, a lot of people trying to build software, but not necessarily the distribution of that, the market fit of that distribution being fully nailed at the moment. Very exciting for builders, very exciting for those that actually are hands-on. But then when it comes to everybody else, the distribution is not solved yet. And the reality is that other than the sectors of the market like this, the startups, the SMEs that can move fast and break things and iterate over things, medium to large corp side of the market, they move slower and they don't move with that kind of like moonshot mentality, right? They move much, much slower. So there's a big delta between all of this money circulating around. And so I would invest too. I think it's always better to be invested in the market, but I would invest with a little bit of balance, right? We talked about in previous episodes about what some of the green shots that are starting to show, for example, like on the Russell 3000, around that kind of that, those parts of the market that are less flashy. We don't talk about them in the media. The small and medium-sized business. There's some interesting aspects actually happening in that part of the market. That means that actually their bottom lines are probably starting to improve. So I would say I think keeping the money invested is important because at the end of the day, in long term, money being invested is always better than money under a mattress, under a pillow that is being, is losing value every single year and has been losing value quite fast since COVID. So keeping investment, but actually having kind of like a good balance, and from time to time having that rebalancing of the portfolio, I think it's actually very important as well for investors to not doing those moon shots and then then being on the other side of the bloodbath. And then yeah, so
So
I think it's important.
summarizing what you're saying, it is inflated, so it is sort of a bubble. There are other opportunities, so balancing the investment is a good thing. And even if there is a downside now and people are having the sentiment of being losing money, investment is long term. So invest on what you believe and wait. That
Yeah,
total.
I think
Like,
it's I think it's important, and there are areas of the market where conviction in investment is very important, especially like in the very early stages of the market when there are like startups that are doing moonshots and things like that. It's important to have a level of conviction. You People say like in the very early stage, you're not investing in the company almost on its own. You're investing in the people that actually are building that company. Um, and therefore that part is really important. But then on more mature stages of the market, like some of the companies that we talk about frequently here, the Nvidias, the Googles, the Apples, etc., of the market that are much like mature, then it needs to be going back to some of the fundamental aspects already, like are they all of this money that is circling around? Does it actually have actual demand? Because those companies are betting on things that require a lot of earnings to be made for them to keep those valuations that they have right now. And are those earnings under threat, or are those earnings kind of like sustainable for the next 5 to 10 years? And being able to be very honest answering those questions, I think it's a requirement for any investor.
Cool. Thank you very much, Will. Thanks for the conversation. Thanks for everyone that have listened to this episode. We've got a lot of other episodes in our channel, so go back, listen to them. A lot of people do listen to us, but they don't subscribe, so we don't see the real numbers. Please do subscribe to our channel, share with your friends, let us see that you guys are listening to us, put stuff in the comments. And Will, for the people that have listened to this whole podcast, what should they put in the comments to prove to us that they've listened to the whole thing?
Michael Burry shorts, I think that's probably the best part, because Michael Burry is always a funny one. I also
What did you
recommend
say? What did you say is his nickname on Twitter?
Cassandra. So look for
Cassandra.
Cassandra.
Put Cassandra. Put Cassandra in the comments.
Yes, put Cassandra in the comments if you. The interesting thing with Michael Burry, for those that actually don't follow him yet, go and look into some of his Twitter stuff. Sometimes the tweets actually they last as little as 1 hour. So he posts and then he deletes them. So sometimes that is kind of intentional. It's just kind of like whether the core groups of people that are kind of following his thoughts. There are lots of bots as well, recommendation. There are lots of bots that run that effectively just repost Michael Burry's tweets. So actually they don't lose actually the content of what he posts. So yeah, look up for the bots as well around Cassandra. It's very funny. He's got like a whole ecosystem around himself. It's a funny one to follow.
Awesome. Thank you very much, Will. Thanks, guys, and see you all next time.
See ya.